Welcome back to Beyond Wallet after the break, and now straight to markets coverage, where Indian benchmarks have ended the day on a high note, driven by a rally in index heavyweights ahead of Reserve Bank of India's monetary policy meeting's outcome tomorrow. Benchmark indices in India hit record highs intraday and closed at key levels. The Sensex clocked the crucial benchmark of 30,000 intraday, while the Nifty 2 hit a record intraday high of 9,274 points before closing below that mark. The Sensex was up 64 points at 29,974, while the Nifty was up 27 points at 9,265. The market breadth in India was healthy as well, with 1,965 shares advancing against a decline of 956 shares, while 136 shares were unchanged. We are joined today by our guest Prashant Bansal, National Sales Head, Broking and Wealth Management at Testimony Securities. Good evening, Mr. Bansal. So clearly a bull run is here. So do you expect bull run to continue? What could be the, we can say that problems, or what could actually stop this bull run from extending further?
Good evening, Sumit. As I was on your show last time, wherein we had indicated for last series that the upside was capped at 9,200. So when we look at the complete structure of the market, both fundamentally, technically and through derivatives data, it is very likely that Nifty is headed upwards. Today's closing was at 9,265, which is the lifetime high closing of Nifty. So when I look at the charts, charts are continuously making higher high, higher low patterns, both on Nifty as well as Bank Nifty. So technically, markets look extremely buoyant. They are likely to head upwards. A very key indicator in our data is the derivatives data. When I look at the derivatives data, at 9,500 call, we have roughly about 5.3 million calls which have been written. And on the bottom at 9,000 put, we have got about 5.9 million puts which have been written. So both these indicates that for the current series, while the bottom is capped at about 9,000 levels, on the upside 9,500 we will see as a key resistance level. And when we look at the FI data, I think something which is extremely positive for the Indian economy is that FIs last month bought 28,433 crores of net purchases in the Indian equities. This has been the highest ever since 2009, since we have been tracking the data. This is the second highest after March 2014, when we had bought a higher number. So second highest FII buying over the last 6-7 years. Derivatives data indicating 9,500 to be a key resistance level. Nifty, Bank Nifty, both of them moving up. So on an overall basis, it looks that markets are headed upwards, and we would be very soon headed into the result season. So we'll wait and watch, but markets are bullish.
So is it a time for put options for the investors? What do you suggest to our viewers who are investors in the stock markets?
In terms of the time frame, as I was on your channel about 3-4 weeks back, our internal research desk targets is about 10,500 on the Nifty over the next 12 to 18 months time frame. So we are sticking to our targets of 10,500 on Nifty. So if somebody has a patience to remain invested, so this is the time to get into the stocks. We need not worry. Get into good large cap stocks. If you're a retail investor, use mutual fund as a route. And if you can manage the volatility of the market, get into the markets and enjoy the good times.
And all eyes are definitely on the Reserve Bank of India's tomorrow monetary policy meeting outcome. What is your estimate over there? Because analysts are expecting no change in interest rate. What is your expectations over there?
Sumit, if I were to see Reserve Bank of India's policy guideline in the last policy, the governor changed the policy stance from accommodative to neutral. So which means he had very clearly indicated that he will probably not go in for a rate cut. So what the market participants are expecting, that the repo rate is likely to be at 6.25. So we concur with that view that the repo rate will continue to be at this level. We would also like to share the inflation figures. So when I look at the Jan inflation data, we were at about 3.17. Feb inflation inched upward at 3.65, though it was well within the targeted 4% inflation rate by RBI, but we are seeing inflation has slightly inched upwards. Now, GST is going to be implemented by 1st of July, which could be a little bit inflationary in the economy, and on top of it, we would be heading into the monsoons, and private forecasters have already indicated that we may not have best of the monsoons around the country. So when we look at all the factors in terms of central bank stance of an neutral policy, monsoon, as well as the inflation, we don't expect too much of changes on the policy rate side. If we reduces the interest rates, it would be a big surprise for the markets.
And Mr. Bansal, what are the immediate headwinds that market could see going forward? What is the concern or the immediate headwinds which market could see?
I think the concerns on the market stems more from the global scenario. If you were to see Dow over the last couple of trading session has not been doing anything. On Thursday, we are going to be seeing the summit of Trump as well as leaping. So markets are extremely cautious. We have a Brexit scenario. If there is any hard landing in the UK economy, we would be in for a surprise. US dollar has been coming down, though it has been good for the Indian markets. But if it falls majorly, we'll have big concerns. So what we see is that the concerns are emanating more from the global scenario than from the local scenario. On the domestic side, I think monsoon is going to be one of the key factors, and corporate profitability, the result season is starting. So these are the two hangovers that we might have on the Indian economy.
So one important point that happened today was that Sensex touched 30,000 for a brief period. It's second time in history it has touched that. So how do you see markets touching a new highs by this year, and do you see markets, Sensex especially, touching 35,000 by the year and Nifty going up to 9,500 or 10,000 by the year? And what is your estimate over that number?
We continue to remain bullish in the markets. As I stated, we have an internal Nifty target of 10,500 over the next 12 months. So that will translate roughly into about 40,000 on the Sensex level. So I think people who have patience, who have done asset allocation in their portfolio, they need not be worried, and they need to stick to their asset allocations and just ride the boom.
And Mr. Bansal, if we talk about again investing in the market, is it too hot to handle now? Is market too high now? What is the suggestion for an investor? Should he go into mutual funds? And if yes, what are the big suggestions from your side as far as mutual funds are concerned? So should they stick to mutual funds, or should start investing even at this stage in markets? What is your assessment, or what is your suggestion for our viewers that they plan to invest in markets?
I think my suggestion for a retail investor is that look at mutual funds. There are a large number of very good quality 5-star rated mutual funds which are available in the market. Our research house pick continues to be an ICICI Blue Chip, Birla Sun Life, Frontline Equity Funds. These are the typical large cap mutual fund. So if you are a retail investor, please put your money in mutual funds. If you are an expert, you can handle volatility, come to the markets. And maybe if you are a first timer and you want to take a direct exposure into the market, there are a slew of good IPOs which are lined up. You can invest into ETFs. But when you are investing in stocks, one has to do thorough research. So rely on your advisor who will advise you on which stocks to buy. Otherwise, if you can't devote time, mutual funds or ETFs are the best bet for a retail investor.
And if you talk about the overall market, if you talk about what is going to happen going forward, do you see this week will be ups and downs, and especially when tomorrow RBI policy is going to come out? So what is your assessment as far as the overall April month is concerned, as far as the markets are concerned?
As far as the month of April is concerned, we have a bullish bias towards the market. We expect markets to be in the range of 9,000 to 9,500 with a bullish bias on the market. So people who are invested, they need to remain invested, not worry. We will have a lot of events like this, like Trump coming to power, Brexit, and a lot of these events happening, but still the markets are headed upward. So one needs to just have nerves and patience and remain invested. And we have seen how equities make real good returns over a long period of time.
Mr. Bansal,
so
talking about
investors need not worry. They just
Talking about certain specific sectors, banking is one sector where there are some concerns still, lurking. NPMS is an issue which is going to be still, be a big concern over there. The government is working on certain steps they are taking. What is your assessment of banking sector stocks? Tomorrow, RBI policy, outcome will be there. What is your assessment on this specific banking sector?
On the banking side, since I've been coming on your channel for last 3 months, we have been continuously bullish on the private sector banks. We have been advising our clients to remain invested on the private sector banks. While SBI has shown a slight breakout move, but we would recommend to all our clients remain focused, be on the private sector banks. There's a lot of NPAs which are there in the banking system. We have got roughly about 6 lakhs crores of bad loans which are there in the banking system. Unless the government comes out with some policy measures like a bad bank or a super ARC, we should stay away from the public sector banks and remain invested in good quality stocks.
Well, thank you so much, Mr. Bansal, for having this quality discussion with us today. Today was a day when Sensex touched, in second time in history, 30,000 mark, and markets were really going up, and they were really going up and down. But yes, they are bullish, which is a big good news for investors or investor community. With this is the time for saying goodbye to our all Beyond Wallet viewers. For more news and updates, stay tuned to Beyond, and thanks for watching us. Good evening, this is Beyond Wallet. I am Sumit Chaturvedi, and let's go straight to our top headlines. India's premier software lobby NASSCOM says new policy memo on H-1B visas by the US to have very little impact on its member companies. Electric car maker Tesla becomes second largest US car maker, displacing Ford in market capital. Indian car market leader Maruti Suzuki starts selling Sia sedan through its premium sales outlet network Nexa. And Indian benchmark indices hit record highs, closing at key levels. Sensex touches crucial benchmark of 30,000 points, while Nifty 2 hit a record intraday high of 9274. Now, India's premier software lobby body NASSCOM has said the new policy memo on H-1B visas by United States should have little impact on its member companies, noting that member companies provide skilled talent and solutions to US companies. Industry body said the H-1B visa system exists specifically because of persistent shortage of highly skilled domestic IT talent in the United States, and its members will continue to provide skilled talent and solutions to fill that gap and keep US companies competitive globally. The US Department of Homeland Security announced on Monday the steps to prevent the fraudulent use of H-1B visas. These visas are issued by and used by employers in the US to bring in specialized foreign workers temporarily. The steps include issuing warning by Justice Department to employers and announcing plans to increase transparency on applicants. The measures announced also focus on-site visits by US authorities to employers who use H-1B visas. In these visits, US Citizenship and Immigration Services agents will also investigate incidents where an employer's basic business information could not be validated. Businesses that have a high ratio of H-1B employees compared with US workers, and employees petitioning for H-1B workers who work off-site. So all that will be compared by US officials now, but NASSCOM has said this is not going to concern them in a big way. Now, moving to Indian e-commerce space, where SoftBank's plan to sell the online marketplace firm to Flipkart may not fructify in the near term, following its inability to convince the board of directors of Chesper Infotech, which owns Snapdeal. SoftBank, which is trying to pull off the biggest consolidation in the Indian e-commerce system, again failed to convince the board of directors of Jasper Infotech, owner of Snapdeal, to sell the online marketplace to Flipkart. The meeting, which went on for more than 3 hours, was not able to reach a consensus as the board of directors, including Kunal Bahal and Rohit Bansal, did not agree to the terms of the deal. While SoftBank is making every effort to persuade other directors, especially the ones representing early-stage investors, Kalari Capital and Nexter Venture. SoftBank is the largest shareholder in Snapdeal. There have been reports that Japanese investor is pushing for sale of struggling e-tailer Snapdeal to bigger rival Flipkart further. SoftBank has been looking to push other investors such as Kalari Capital and Nexus Ventures partners to get their approvals, but was not successful in convincing them. The New Delhi-based e-venture company Snapdeal, which competes with US-based Amazon and Tiger Global-backed Flipkart, has been looking at raising fresh funds to tide over its cash crunch. Over the last few months, it has trimmed its workforce significantly and has shut down non-core businesses as well. Moving to aviation space, where Air India sees jump in passengers after US banned people traveling by some Middle Eastern airlines from carrying laptop, iPads on flights bound for the country. Of all the marketing tools an airline could possibly have in its arsenal, Bereft Labs wouldn't ever have been considered to be a potential revenue spinner. But it's the catchphrase in Air India these days, as ticket sales for its flights to the US jumped 60% after that country banned laptops in cabin bags on certain direct flights from the Gulf. All passengers on board Air India flights from India to destinations in the US, irrespective of their nationality, can carry laptops in their cabin bags and use them on the flight. However, those who board direct flights to US from Dubai, Abu Dhabi, Doha, Kuwait, Jeddah, Amman, Cairo, Istanbul or Casablanca, that is, fly on carriers based on these airports, will have to mandatorily check in all electronic devices larger than a smartphone like laptops, tablets, etc. Moreover, after they disembark in the US, these flyers join longer security queues as their handbags are checked. This has worked to Air India's advantage. So clearly the loss of these Gulf carriers is the gain by Air India, which is going to have an operational profit this year. Now moving on, messaging app WhatsApp, which is owned by Facebook, is mulling a foray into digital payment services in India, its first such offering globally, and it has advertised to hire a digital transaction lead in the country as well. WhatsApp is planning to move into digital payment services in India, its biggest market, that is home to 200 million of its billion-plus global users. WhatsApp plans to follow the footsteps of messaging apps like Tencent Holdings' WeChat in China. WhatsApp is working to launch person-to-person payments in India in the next 6 months. And moving to telecom space, as the Indian telecom sector goes through its largest consolidation phase in history, companies are trying to soften the blow on the thousands who may face the X by reskilling employees and roping in outplacement firms to find them different jobs. Company officials of telecom firms and hiring experts say that firms have been hired to conduct mapping of employees across levels so that training them in a new role becomes swifter, while some telcos are creating new roles for internal transfers. Right Management, a top outplacement firm, was contacted by 2 of top telecom players in the last 6 months in India. The mandate given was to place their workforces elsewhere. So clearly, telecom firms in India are reskilling their workforce so that they can be employed somewhere after they are hired. Now, the news that can benefit our viewers, that average increment for the year 2017 in India is expected to remain almost flat from last year at 9.7%, mainly driven by weak market performance and low salary budget, according to a KPMG survey. The projected increment for the 2017 and 18 is 9.7%, a drop of 0.6% from 2016 and 17. This is mainly because the markets have not done well last year. Low salary budget, cost cutting within companies and higher pay packets are other reasons why increments will not be that great this year in India. The highest increment of 12.5% is reported by e-commerce market in India. The lowest of 8.1% is that of logistics sector. The survey of KPMG has said that the decline was seen most in the banking and financial services sector, where financial services sector has decreased the increment from 9.7% to 8.1%. The survey was conducted among 263 companies across 19 sectors. Average projected variable pay across sectors is 15.4%, almost same as last year, just 4.4% higher than that in 2016 and 17, the survey revealed. The survey also found that financial services sector reported highest variable pay of 20.7%, while the energy sector reported this at 10.7% only. Now coming to auto space, where Tata Motors will phase out close to 4 cars from its current product range over the next 3 to 4 years. The Tata Motors will phase out at these cars to pay the current number of platforms from 6 to 2 by 2020 and 2021. The models that are likely to be at the end of their life cycle are Tata's Nano, Indica, Indigo CS and Sumo. Production of Sumo Grande, a derivative of Sumo, one of the earliest cars Tata had launched, has now been stopped, while Nano is still in production. Indica and Indigo CS are still in production, but Tata Motors plan to leave all of them and stop their production in the coming few years. Now, a report by commercial real estate firms says that Delhi's Connaught Place is world's 9th most expensive office location. The annual prime rent for the place is $105 per square feet. CRES officials said that despite the limited space, Connaught Place in Delhi is still a sought-out place. Mumbai's Bandra Kurla complex is at 19th position, while Nariman Point is at 30th position. Hong Kong Central tops the list of world's most expensive office market with an annual prime rent of $264 per square feet. Now, moving to US, where Tesla has become the second largest US car maker, displacing Ford in the whole of US. This is in terms of market capitalization amid concerns about the ability of US market to keep growing. Tesla said the company saw a huge jump in sales in the first 3 months of the year. The car company said it delivered 25,000 of its high-tech vehicles in the January-March period, which is first quarter last year. The company had reported its first quarterly profit in more than 3 years. Tesla founder Elon Musk marked the occasion by taking a dig at other car makers and investors who bet that the company's stock would decline. Well, Elon Musk tweeted that the stormy weather in short Willy, I end quote. Staying with the auto space, where car market leader in India, Maruti Suzuki, has started selling the Ciaz sedan through its Nexa premium sales outlet network. The move has been prompted by Ciaz having successfully entrenched itself in the premium sedan market and Nexa's wider reach. Ciaz has emerged as the market leader in premium mid-size sedan segment within about 2.5 years of its launch in October 2014. Maruti could not have sold Ciaz through the Nexa channel earlier, as the model was launched just a year before the premium showrooms of Nexa opened. The firm was then focused on expanding the Nexa reach and its network. It now has 250 outlets of Nexa, which have sold 2 lakh cars so far. In this fiscal year, sales by the outlets of Nexa are projected to cross 1,50,000 units. Maruti launched Nexa outlets in July 2015. The Ciaz will be the 5th model to be sold through Nexa. It currently sells the S-Cross, Baleno and Baleno RS hatchbacks and Ignis through Nexa premium outlets. Now, Indian iconic bike maker Royal Enfield enjoys an iconic status among bike lovers in India. But some of company's apparels are not going down too well with the customers, and the reason is they are made in Pakistan. As part of a brand building, the company has been importing some of the apparels from Sialkot-based manufacturing in Pakistan. Many people posted pictures of manufacturing tags and labels on their social media accounts, expressing their displeasure, shock and anger over these all apparels made in Pakistan. It's time for a short break on Beyond Wallet. After the break, we will come to you and talk about Indian markets where they are touching new highs today. Stay tuned.